understand the limitations of what's it called line charts, we need to establish the fact that line charts can give us every of the information we need. However, it's going to give us something other charts cannot give us. Now, to look at it from this angle, this is what you have on your trading interface, where you have on your trading view. Currently, I'm on trading view. So, to that first, you need to change from candlestick that is right here, which is generally used, to a line chart. And how do you do that? You come straight to this particular point here, where you can see this after the time frame. You click on this, and you see different kind of graphical representation of data you could have on TradingView. So because we're looking at our line charts at the moment, I'm going to click on line chart, and this is going to present these things for me. Now, if you compare the picture we have before to this current one, you realize that the line chart is giving some kind of information that the candlestick can give. However, it's not giving everything, and that is where it comes in the place that as a professional, you must be able to understand the combination and how to apply the both of them. Let's say for an example now, this particular line I drew here and here and here made a lot of sense when it was still on candlestick. But right now, it's not making real sense because it is a line chart. However, I'm going to understand that later. So, what line chart does it gives you information, makes us understand, supports the resistance zone, and makes it easy for us to quickly identify patterns in the particular trade. So, right now, if you look at this, you will see that what you have is line, and these lines are trying are showing the action of the market. Now, if you look at this, you could actually pick up there is what's it called, a particular pattern that is already forming up on this particular this particular pair. This is for an USDT on a 1 day time frame. But if you're using the candlestick, you might not say that. I'm not going to mention the what's it called. I'm not going to mention the pattern at the moment. I'll tell you that later so you can start and say it. Now, but the first thing is, if you look at this, you will realize that where is it? You realize that this was actually going in an uptrend before. You pick it from it was actually going in an uptrend before, right? So, and later, I think, okay, so pick it this way. Well, let's keep this part. I'll delete that part. So if you look at it, you realize it is going in an uptrend, right? Until it broke down this particular point here. It broke down from here, right? It broke down from here, and we realize that now we've had a breakout, a break of structure. So I'm just gonna do that. Just gonna do that. So we had the break of structure. Now the line charts can help us understand this easier than if we were using a candle. You understand? This is one of the advantage of the line chart. But before we go back to the candles, let's discuss the limitations of the line chart. The line chart is not going to help you quickly understand, or what's it called, and pick out some vital information on your market, because it has the limitation of giving missing data. They are missing data because it only shows us the closing price. There is no high, there is no low. If you look at this now, we only have the closing price of each day. If I put it in 4 hours, I'll only have the closing time of each 4 hours. If I put it on a daily time frame, I'll only have the closing time marked on this particular stuff here, right? So let's go back to the daily time frame. So it only gives you the closing price. Also, there is hidden volatility. You can't get to see, because we can see the highs and the lows on each time frame. So we can get to see the actual volatility that is going on in the market. And the last thing about the limitation of line chart is it gives false signals, because you can't use line charts to want to predict your entry. You are not getting proper information. One line chart is very good at it. You understanding or quickly getting a picture of an overall trend pattern on the market structure of a particular page. So now let's go back to other types of charts. Let's see. Let me show you how you can change to other type of chart, which is, for an example, the bar chart. Now, if you look at the bar chart, you see the bar chart readily gives a certain level of information. Now, from here, we can quickly get the what's it called, the uptrend. Also, we can see the uptrend and see the breakout structure. Now, let's go to what's it called, the candlesticks. So you would see we could have the same thing, but there's a difference between the line charts and the candlesticks. And the difference here is they are more intricate information, right? So let me tell you, I'll show you quickly everything in just as well. So now that we have understood that yes, we had an uptrend here before, right? And now we had a break, what's it called? A break of structure, or let's say a change of structure. So we had a change of structure because we had the market coming this way. So we had it coming down like this. So now one thing you have to understand is if I was to quickly understand the structure going on in this market, I have to use a line chart. And what I'm going to do is that is, if you look at it properly from here, let me use the line and let me change the color. Let me use the line. So let me just use the same color. So if you look at this now, you notice we have this particular line here. Oh, sorry, let's use path. So if you look at it carefully, you notice we have a particular line here, right? We have another one, we have another one here, right? Then we're having another one here. So what does this begin to look like to you? It's beginning to look like a head and shoulder pattern. You see? So one thing line chart does is it quickly gives us the chance and the idea to get a proper picture of what's going on in the market. Now, the reason I'm not going to count this part as a show that because you see it is not balancing with this. It's still apparently in the option and we've broken out of the uptrend. So the market went into a bearish pattern since it broke from this particular point. And now we are in and head and shoulder. You see there are two possibilities here. It's either it goes the tanks from here, right? Or it goes up from here as well, then does this shoulder pattern. So just going to remove this as well. Now let's go back to candlesticks and you see the difficulty you're talking about, how easy it is for us to quickly identify this pattern in line chart and how quite difficult it is to quickly notice this in the candlestick pattern. If you look at this in the candlestick pattern, it's not quite very easy to quickly get the picture going on around here. Look at it. You can't quickly get it because you're having too much information. You're having too much information. However, the advantage of line chart is to show you what is going on. But the advantage of the candlesticks, why you have to understand how to combine both of them to use them to have a profitable trade is because this candlesticks is going to give you proper idea and insights to know where your entries should be. Let's go back to line chart. I'm going to use the line chart to get what's it called the liquidity zone in this particular trade, which is this. You see, now I have the liquidity zone. I know where the major resistance and support is. Look at it here. This is the major line. So if you are using line chart alone, you might want to set in your entry from this particular point. However, that might be something wrong to do, right? Why? Let's look at the candlesticks and you get the proper information. You will see everything seems perfect on the line chart, but it doesn't look quite well on the candlesticks because there is so much volatility happening around it. So you might fall for liquidity inducement around this place because this particular zone here is not visible on the line chart. I'm going to adjust this. This particular zone from here to here, which is touching, let me say, let's bring a little bit here, which is touching almost every part, which is here, 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 which is almost going to be a little resistance or support zone for you if you want to short this. It's not visible on the line chart, and that might give you a little issue or make you enter the trade at the wrong time. So now, if I'm going to want to try to enter this trade, what I'm going to do is I'm going to look for the liquidity zone and try to avoid the liquidity inducement to avoid the inducement from me from losing our trade. So basically, this is what's showing on the line chart. I'm not going to enter here. I might enter from here. I just bring a little bit here because I know once it breaks out from here, the market is in the proper swing. However, if you're a short trader, let's say a swing trader, you might be like, oh, I can actually swing this from here down to this particular point, right? Because you're very sure it's doing the inverse and it's doing the head and shoulder pattern. So that is the difference between a line chart and a candlestick. The limitations of the line chart and the advantages of the line chart, as well as the limitations of the candlesticks and as well the advantage of the candlesticks. You do have to remember though that there are different type of graphical representations that are available in trading view. We only talked about three of them: the candlestick, the line chart, and the bar chart. I showed you the bar chart earlier on. There are still other ones you could use. You could use the holo candles. You see, these are going to show you some kind of information as well. And you could use the line with markers. I do prefer this one. There is another one called the step. You see, this particular point I marked on the line chart is also visible on the step. You see, so this telling us that this is a proper liquidity zone. It's a proper liquidity zone, right? So there's still that ones you might want to check out. You can check them out on your own at your leisure and research more about them. Find a way to combine both or all of them together for a trading experience. And if you're interested in understanding how to enter trades at the right time at the proper time, I'll advise you to check out the next video in this particular playlist. I'm going to be showing practical examples, understanding patterns, and knowing that you just don't have to rely on liquidity sources alone. You have to understand the patterns, understand the trend, and everything for you to know where to enter your trade and have a proper trade and avoid you losing not your money. So when it start coming, we stay cool and play big.